Okay, we're reading USDA guidelines, and we're talking about what are some primary applicant qualifications. Number one, income. Borrowers must demonstrate stable and dependable income for repayment qualification. Minimum income history requirements depend on the income source. That's an interesting question. I would like to know specifically how that works out. Definitely need 1 year job history for sure. In some scenarios, I think you really need 2 years of job history, but I'd be interested in knowing what those income source differences are. I guess for self-employed, I'm sure it's 2. Okay, assets, no down payment or reservation or reserves are required. No down payment or reserves are required. Of course, you got to figure out how to handle the closing costs, but there are different ways to do that, including seller concessions. Credit, although there is no set credit score requirement, applicants must demonstrate a willingness and ability to repay debts. Lenders can assess alternative credit for applicants with no traditional credit. That is good to know that there's no set credit score requirement. It seems like in my mind it's always been 640. So no limit is definitely interesting. Although I do know for sure that no no score borrowers are definitely an option. You can definitely do a USDA loan with a no score borrower. Monthly housing payment, adjusting for eligible compensation factors, total payment, principal, interest, taxes, insurance, homeowners association dues, and rural development's annual fee cannot exceed 29% of the applicant's gross monthly income. This is where a lot of people fall out of USDA eligibility and have to go to FHA because they're trying to purchase a home where their principal, interest, taxes, insurance, HOA dues, those numbers add up to a greater number than 29% of the gross monthly income. However, that 29% rule really helps to protect borrowers from, biting off more than they can chew. All monthly debt payments shown on the applicant's credit report, including the proposed new mortgage payment, cannot exceed 41% of the applicant's gross monthly income, adjusting for eligible compensating factors. In other words, this is your back end debt to income ratio. I'm sure you know exactly what that is. Seller or interested party contributions cannot exceed 6% of the sales price. There is no limit on the amount of gift funds an applicant can use. I do wonder if the gift funds were to push them over that 20% mark, would it make them ineligible? I don't know the answer to that. Never had that come up. So in the next video, we'll get on to these last different parts. But again, I'm Josh with Churchill Mortgage. If you're looking for a partner or a team, reach out.